Hey, hello friends. This is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at the technical charts and try to understand what happened in the market during the day, and then also plan for a better trade for the next day. That's February 2nd, Friday 2024. We had the union budget today, and we had the reaction from the market after the Fed outcome, Fed meeting, US Fed meeting outcome that came out yesterday night. So market reacted to both of those, and let's find out how it was. Finally, it was a flat close. Let's analyze more, see all things. And here is a quick wrap up of all the things. Take a screenshot of this if you want to look at and not listen to the audio. But before that, we would first go in and check the candlesticks to begin with, and here we go. This is what happened today. This is unlike to what many would have expected. We had a vote on a good budget, but some would have expected that it's a normal budget, it would be a full-fledged budget. Different kinds of people bet on, including the institutions, bet on the budget day and place different strategies, and so it's always likely to be very volatile, but sharp movements on one side post the volatility crash and the event outcome. But that didn't happen today. It was very volatile, definitely because of the betting or the speculation, whatever you call it, but it didn't make any big moves. It was on the Nifty, it is actually ended up negative, but flat is negative, just 0.13%. That's only 28 points loss, but it's a bear trap and a red candle formed, right? That's what happened. Remember, we had huge volatility since last 3 days. One day gaining 400 points, next day losing 200, and the third day gaining back the 200. That is a kind of moves ahead of this confluence of two major events that was in queue. A lot of speculation was there. Volatility picked up to 16 plus, and today it is all cooled off, right? But no major moves happened in the Banknifty in one direction, although it was very choppy throughout the day. Let's look at what Banknifty is showing. Yes, Banknifty shows the reaction to the market in a little more positive way on the macroeconomic positiveness that the market has read from the fundamentals of the budget, probably. But it could not do too much more than 0.42. That's less than 200 points of gain, and just could not manage to close above the 20 exponential moving average or the 50 exponential moving average yet. Probably that was because the Fed outcome was hawkish in nature and market was indecisive, just like it's a doji and a pin bar. It's kind of very indecisive, but at the same time market has bullish supports. Market neither want to move up or down, and with the big bull bear fights and the long supports on the downside pushing it up, and then still resistance pulling it down, and then finally ending up at decisive. That's what Banknifty is showing. But overall Banknifty managed to close green. Has taken the outcome more positively. At least some movement happened 200, but otherwise it was flattish. If you look at intraday, it was very choppy and a V-shaped reversal. And not V-shape, it was like very choppy moves that you can see in 5 minutes. If you look at February 1st, it went up and down and up and down, very choppy, right? And the Banknifty also, it was very choppy, but it was managed to close green. Now let's look at where exactly is this in the charts. So as we know, this yellow parallel channel has been retraced, being 4.5%, and then for 6 days it was trying to move up and go back to the top of the channel, but it is facing a stiff resistance at 21,850, which is a zone of consolidation. So any breakout from the 21,851 would be crucial. Immediately have resistance at 21,970. So 22,000 is not going to be an easy task. That's what it's showing, the charts are showing. But regardless, market managed to hold the 20 exponential moving average today, Nifty, right? So it's kind of trapping the bulls one day, then trapping the bears another day, but unable to break out of that consolidation zone. Banknifty, which has made a steeper correction of 8.5 as against a 4.5% correction from Nifty. So after the deep correction, it has fallen down from the blue trend line channel and took support very close to the 200 exponential moving average, and then managed to move up the last 5-6 days, and it is facing resistance at the 50 and the 20 exponential moving average confluence, and that's a very zone where it is trying to establish its upward movement in the blue colored trend line channel after having climbed back into it. Stiff resistance there, any move upside would be very positive. Now let's look at, but the point is it is closed below the exponential moving averages 20 and 50, but Nifty is managed to close above that, all the trapping the bulls and close negative. So you can also see that there is a flag pattern that's getting formed on the Nifty. Banknifty also wider pole and flag pattern is there, which is primarily bullish in nature as long as the bottom of the flag is not reached. So that's also a positive pattern that is coming out. Now levels, if you like, it remains more or less the same. The first resistance will be at 21,851, which is a consolidation zone or swing highs, whatever you call. And after that you have the 21,970 zone, which is where the gap resistance is there. And after that 22,000 big rounding number is there, and then 22,125 all-time high levels. These are resistance on the upside for the Nifty. Downside, the first support could come in at the 20 exponential moving average, which is close to 21,500. If that is breached, it will go down to 21,350, which is the 23.6 Fibonacci retracement levels, and then after that it could fall to 21,200 nearby, so the 50 exponential moving average, and also the bottom of that box consolidation is there. So any breach of that could take it to 20,950, and after that it can take it to 20,750, which are both gap supports downside on the Nifty. Bank Nifty, if you see the resistance, first will be take out that 46,300 zone, which has put a green close above that is very important, above the 50 and the 20 exponential moving average confluences. And once that is taken out, it is 47,000, which is the major resistance. Then because it's a rounding number, and then 47,100 would be the 23.6 Fibonacci retracement level. That could be a resistance after that. Once that is taken out, once 47,200 is taken out, the consolidation zone is out, and then less gap will be at 48,000 rounding number, as well as the gap. Then the all-time high at 48,636. That's resistance on the upside. Downside, the first some support could come in at the 100 exponential moving average, which is at 45,650. If that is breached, then so before that 46,000, 46,000 would be a first support, and then you would come to the 45,650, which is the 100 exponential moving average. If that is also breached, then next stop would be the 44,650, which is the 200 exponential moving average. Breach of that could take it to 44,000K, and then eventually 43,960, which has got a gap support. That's resistance supports on the Nifty, the Banknifty, and the pattern study. Let's just quickly see the wrap up. Right. So we have a negative close, that is closed point, flattish negative, just 0.8 points gone, but could it close below the 21,700, and it's a bull trap candle, it's a bearish candle, negative close. Remember, we are in the middle of 4.5 retracement after a 31% rally. Right. Bank Nifty also was very volatile, and managed to close positive, but the candle that is formed is indecisive. Right. The gain is around 0.4 to 0.5% of gain, 192, less than 0.5%. So the pin bar doji on the top could be indication that we already seen that analysis. Then it could be reversal in the case of if it is considered to be at the top of the channel. Reversal could mean for downside, not the upside. It's only applicable to the low or the high is breached. Right? Regardless, hammer or doji, pin bar, all this, they are all small body, they are indecisive. The big size indicates the huge support that is there, potential for a reversal depending on whether the bottom or the top of that candle is breached or not. Regardless, it managed to close above the 46,000, in fact 46,150 above, but it still could not manage to close above the 20 and the 50 exponential moving average. Remember, it had done a slightly deeper correction of 8.5% correction from a 26% rally. The Fyers turned out to be buyers after several days of selling 35,000 crores in the cash market. They had now 2 loops of buying yesterday. So the return buying is ahead of the Fed event, but Fed event has turned out to be hawkish, so we don't know what will happen, what would have happened today and what will happen tomorrow. It could be more bearish in nature probably, but today's had been buying since 5-6 days and they did the same yesterday. Today's data is not coming. We'll just quickly go and refresh and see. The data is not coming. Today's data is not coming, but considering the kind of volatile moves and the lack of more trailing move, could be that both of them might have sold today. I'll check that later, but FIs, there's likelihood that they can turn out to be bearish because of the hawkish outcome of the US Fed meeting minutes, right? The resistance and support levels of the indices we already seen. I'm not repeating that. Momentum continued to be sideways, but it's slightly falling in the case of Nifty and sideways and rising on the case of Banknifty. So momentum has picked up for the case of Banknifty, especially after having fallen down with the bear zones. Trend, however, has crossed over to the bull zones for the Nifty, slightly but very weakish trend in the bull zones, but it remains to be bearish, and the crossover has not happened in the case of Banknifty trend. We are considering the ADX for the trend indicator, and RSI above 60 and below 40 for the identification of the momentum. Now the India VIX volatility has definitely cooled off after the event. Two, three major events were there. They are all over now. So it has cooled off substantially. It's a 10% cool off that has happened, and it's at 14.45. However, still momentum is very high considering the fact that the market is still at the top. It is not cooled off as much as the market moves at this point, so I have to be cautious about that. If there is a chance it can spike above the 16 and go to the 20, so in that case you have to be cutting short your position size and manage your risk. The study of the Bollinger Bands indicates that there is sideways moves anticipated ahead for the Nifty, considering that there is band contraction that is seen in the Nifty. In the Banknifty, it continued to be band expansion on the downside with the bearish bias, but Nifty has got a bullish bias and also it is contracting sideways, so expansion is not there in the Nifty. So it's a divergent view which shows that Banknifty is expected to have more downwards downside while Nifty can be consolidating, right? So that's what daily charts of Bollinger Bands indicate. So technically the momentum has come down during the retracement. Trend also has crossed over the bear zone slightly on the basis, but as of now it's sideways. You can see Nifty and the Banknifty both with respect to the momentum primarily on the short term. Remember, this is after 4.5 to 8.5% of correction, but the correction is not that fair. For the Nifty, it is considered it has 31% of vertical moves that happened in December. That the amount of correction may not be fair enough. So if the Banknifty is not able to move up and then a breach of this 200 exponential moving average happens once again, the Nifty may have to correct and then catch up with the Banknifty. So we have to be cautious on that fact. If you look at the different sector indices, it is almost close to red today except the auto and the FMCG. So the momentum wise in the short term, you can see that all the sectors are sideways now except for the auto and the pharma, which is maintaining the bullish momentum. So overall indices are also moved the sideways momentum overall, right, out of the 7 major sectors that we try to understand. Now the heavyweight stocks that contribute maximum to the indices, they are all in red today except for the HDFC Bank, ICICI Bank and TCS, which managed to kind of close flattish green. Now Reliance and the Infi are the two stocks which maintain the bullish momentum still on the daily charts, but others all remain sideways. It may also need to be made note that the HDFC Bank and the ITC, big giants that contribute maximum to the stocks, to the indice, is having bearish momentum. So it's a mixed bag of two major of those having bearish momentum, two other majors having bullish momentum, while others are maintaining the sideways momentum. that's how it is. So it's a mixed bag, heavyweights, no major. So yeah, so it's okay as of now. Yeah, try to keep a watch on whether majority is getting into bearish momentum or not more. Right, that's what we have to watch out for. US indices had turned red yesterday, and it was an all-time high, and it had a decent rally. And it is after the outcome of the hawkish Fed meeting outcome, then it is shown red. So you have to be careful. Corrections out there at the mother market could reflect here as well. Probably not always necessarily, but it may. And rupee is weak as usual, but small gains have come in today, and the dollar has spiked up a little bit. Crude oil has also spiked up and trying to move up following the dollar spike and the US market crash. It's crash in the sense most market corrections. The gold is spiking up slightly, and it's at the very top and had made all-time highs several weeks back, and it is consolidating since they're not ready to fall down. Right, so it's a green there on the gold as well. Now every time such corrections happen, it may be a potential opportunity for you to invest in good quality stocks for long term in the small chunks and SIP. For a trade, it's the direction that matters. As of now, sideways momentum is there in both the indices on both the time frames. In the case of Banknifty, but in the Nifty, sideways is not, it has come in as confirmed on both time frames yet. So you have to wait on that. But Banknifty sideways momentum confirmation is there. So whenever sideways comes in, go for no directional or both time frames is showing direction. That's when you have to go aggressive on the long side. As well as two options, derivatives trading especially. Manage risk is all that you can do whenever the VIX is spiking up. Right? And where do you take? It's based on the probability study of the support and resistance that we make out from the technical analysis or from the data of the operators and things like that. So tomorrow may be time, it's a Friday, time for you to take weekly positions on the Nifty and the Banknifty. Because the premiums will have more value and you can have a wider range and all that. It could be any strategies, but Fridays are ideal for weekly positions. After that, the premiums indicate it may not work out as you plan. So look for how the market is reacting in the first half and then take positions accordingly. So that's all. So overall, it's kind of tomorrow is good. Today was a very event driven day. So you have to wait and watch for how the market reacts post the events. Right, and accordingly you have to react. As of now, it's at resistance in Banknifty. Nifty also is facing a resistance in a consolidation zone. And neither do we have a sideways confirmation nor do we have a directional confirmation. So we have to be a little cautious, okay? And watch out and play. Okay, that's all I have. If you're not subscribed and watching this, please subscribe and share it with friends and colleagues. It will help others to come to know about this video and watch it. Yeah, thanks for watching. Happy trading, happy learning, happy investing. Bye bye.